gold is hit new highs. It's just trying to top out and break it out again. And silver is nowhere near that yet, but now it's made its first move. And so $50 could just be the next stop. The next high or on silver could be much, much higher than that even.
Jim McDonald joins us today. He is the CEO of Kootenay Silver. We're going to be talking about the outlook for the silver market, gold included, because these two metals are intricately linked. And of course, the outlook for the mining sector overall. Welcome to the show, Jim. It's good to see you.
Yeah, good to see you, David. Glad to be here.
Glad to have you on the program. We spoke many years ago. 2021, I think, or 2022 was the last time we saw each other. Back then, you had said that if silver reaches $30 an ounce, the next leg up is to $50 an ounce. And it was a lot lower back then. Here we are, above $30.
Yeah.
What's next?
50. That's what's next. Thanks for reminding me of that. But that's true, though. Well, in our belief, it's part of the cycle, the natural cycle, precious metals. And it's amazing how the precious metals have really maintained their purchasing power, especially over the last 20 years. I mean, historically, that's what it does. But it's actually increased with the amount of fiat currency that's been created, particularly in the last 4 or 5 years. And what an ounce of gold would buy 20 years ago or 25 years ago, it's actually buying a little bit more in goods and services now. But back in 21, when I said that when we break 30, we're going to see 50, that's part of the cycle of a silver bull market that I believe that we've just entered. And there's all kinds of metrics people look at, and one of them is the gold to silver ratio. And so I just recently read an analysis by someone over the last approximately 50 years, the average is about 54, that ratio. And when you see the precious metal cycles, you'll see big dislocations in both directions. Just a couple of years ago, the ratio was about 125. And when silver was last at $50, I think it had gotten down to under 30 or thereabouts. And it gets as low as 14 as well. So you see these big swings in both directions. And we haven't seen that yet. Gold is hit new highs. It's just trying to top out and break it out again. And silver is nowhere near that yet, but now it's made its first move. And so $50 could just be the next stop. The next high or on silver could be much, much higher than that even.
Speaking of $50, Jim, I don't think silver has breached $50 since the 80s, if I'm not mistaken.
Well, back
or 2011.
2011, yeah.
Yeah, 2011. Yeah, my apologies, 2011. And I hear about gold being a protector of wealth. People say, well, if you've just left it there for 25 years, it's outperformed the S&P 500 over the last 25 years, and so that's a good wealth preserver. But not really true for silver because, like you said, 2011, $50, and it hasn't retraced it since then. So how would you explain to somebody who may not understand the industry that, well, he may ask you, Jim, why should I bother investing in silver if over the long term, over the last 15 years, it hasn't reached new all-time highs like gold has?
Well, it will.
Okay.
That's our belief. It's on its way now. I strongly believe that. And interestingly, it was about 20 years ago now, I was touring a large investor from London who was a pretty strong silver bull at the time and probably still is. And I asked him, why is he investing in silver? We were going to visit a operating silver gold mine that I was the president of at the time, an underground mine in Mexico. And he gave me a whole bunch of reasons that were quite logical and made sense. But they're also the same reasons you'd buy gold. So I asked him the question, why don't you buy gold? And he said, well, because if I'm wrong about my thesis, at least silver has this huge industrial demand to back it up. And that's a very interesting point. And I think that's an even stronger point today than it was then because of the increasing industrial demand you have, particularly in in the green energy space, and so with a focus on the solar energy and solar panels and the huge use of silver there, plus a lot of advancements in other areas that silver is expanding into, including the medical industry and like all electronics. So you've got that kind of inelasticity in the supply that gets created because of that huge industrial demand. When the monetary demand kicks in, then you get this real kind of stretch of supply and you get that slingshot and that price of silver where it shoots right past gold and far outperforms it for a time. So to your point, silver is more volatile than gold in long term, and I believe it's probably because of that big industrial component.
What's the thesis for your bullishness long term for silver? Is it the monetary component? Some people still consider silver money. We can talk about that. Is it the industrial component? All of the above? None? What is it?
Well, I think it's both. It's both industrial and monetary. So you you can't just simply crank up the printing presses and create more silver. Silver is hard to get out of the ground. It's hard to get out of the ground profitably. And you've got a huge growing industrial demand and necessity for silver now that wasn't, well, there's always been a huge industrial demand, but the new consumption in the solar industry is something that is having a big impact and going to continue to have a big impact on the demand for silver. So you have that, and you have the monetary demand. It's poor man's gold, so to speak. And silver is used as a monetary instrument, just like gold is.
This is a report from the Silver Institute, World Silver Institute Survey 2024. Says, I'll just read two paragraphs here. For yet another year, and the third year in a row, silver demand massively exceeded supply in 2023, while the global market deficit fell by 30% year over year from last year's likely all-time high at 184.3 million ounces. It was still one of the largest figures on record. Now, importantly, we remain confident that such deficit conditions will remain in place for the foreseeable future. As we discuss in detail, our projections for 2024 see the gap between supply and demand grow by 17% thanks to ongoing growth in industrial demand, a recovery in jewelry and silverware, and still stagnant supply from both mine production and recycling. Well, you are from the mine side, so we'll talk about the supply in just a minute. But I like to get to the part where they discuss demand. So the industrial demand. Tell us, just break down which kind of industries or what kind of industries are in most need of silver right now.
Well, the big ones, as I touched on, is the solar industry. So it's the green energy revolution that's ongoing, being supported by different governments around the world. Big push there for this clean energy. And so silver is a key component in solar panels. So that's probably the single biggest consumption industrially of silver. The next will be in electronics. It's an extremely good conductor, silver, and is used in all kinds of electronics, from cell phones to iPads, laptops, etc. So, and then one interesting area that's seen a lot of growth, although not on the scale of solar, certainly is the medical industry, because interestingly, silver is an antibacterial agent. And when delivered in nanoparticle size, so very, very small particle size, it destroys every single bacteria known to man. It will hit the cell wall and dissolve that cell literally. And before the invention of penicillin, it was a pretty big antibiotic used in the medical industry.
These sectors will expand. Is that your overall thesis?
Yeah, well, they have been expanding and they'll continue to expand.
Okay. Going back to the gold silver ratio, I've heard ratios or historic ratios as low as 8. Other people in the industry have pointed to the fact that historically the mine ratio was 8. So 1 ounce of gold to every 8 ounces of silver mined, and so therefore the projected gold silver ratio, if you want to talk about that, should be 8. That's very, very low. Is that something you've heard?
Well, yeah, and interestingly, the mind ratio you're saying is eight, something like 7 or 8, and so is the crustal abundance. So there's there's studies about crustal abundance of every element you can imagine, and that ratio is about the same. So yeah, that's true. And you've seen like monetarily what silver trades for has certainly been down to 12. So if you could imagine a ratio of 12 or 10, silver would have to be over $200 an ounce.
Yeah, the current gold price, what, sorry, the current gold silver ratio is 82. So
Mhm.
I'm not saying it will go down to 12 or 8, but let's just assume that the gold price stays the same at a gold silver ratio of 12 or 8. Yeah, you're looking at a 10x increase in the silver price
Yeah,
from
yeah,
where it is right
that's
now.
correct. So I mean, it's very explosive on the upside. And so, as an investment, as a monetary investment, it's good, it's excellent. As a speculator's investment, it is even better because of that volatility and that slingshot effect. When it gets going and starts to catch up to that median over the last 50 years, the median ratio is about 54. So we're at 83 now. That's a long way away. So that we should be trading around $50 already, pretty close to it.
Well, we can't talk about the future of silver without talking about the future of gold, as these two metals have, even today, moved in tandem for most of its history. Although, as you've discussed, silver has a higher leverage. So let's talk about gold. It's currently at just under $2,400, 2,390 as we speak today on Monday, the 22nd of July. Just last week, it breached a new all-time high, Jim. What's driving this gold price to new all-time highs repeatedly this year? This is like the second or third time it's done that.
Yeah, it's really bumping along, looking like it's verging on a pretty major um, breakout to the upside. And silver's doing the same thing, following along. And why? Well, it's there's lots of commentary by people, economists, and people who study this a lot more than me and are more knowledgeable about it. But the bottom line is the amount of fiat currency that's been injected into our economy across all nations the last 25 years is incredible. And so that's just devaluing the paper currencies. And especially during COVID, I can't remember what the numbers are exactly, but in the United States, the amount of money that was injected into the system, uh, it dwarfed what was injected into the system during the financial crisis. And it was injected in a lot shorter period of time. So it's not surprising that we had this huge inflation hit us coming out of the back end of COVID. That was inevitable. And in the meanwhile, gold just keeps chugging along, being able to buy the same amount of goods as it could 50 years ago. In fact, more. I I have a receipt of some gold purchased in the year of 2000, and it it was it was at $300 an ounce, and you could buy at that time almost um, between 15 and 20 barrels of oil at that time with 1 ounce. So today at 2,400, you can buy about 30 barrels of oil with oil at $80 a barrel.
Yeah.
So the purchasing power in that measure is actually gone up. Now, those two commodities can be pretty volatile, but that's the point. What does $300, how many barrels of oil does $300 buy today?
Yeah. I mean, there's
Less
many
than
ways to
four.
look at this. I mean,
Yeah.
I think 10 kilograms of gold uh, was able to purchase a house 100 years ago. It still is able to do that. Uh,
Yeah.
Not so with the same fiat dollar terms in nominal
Yeah.
terms. So yeah, there's many ways to look at gold as a purchasing power um, protector. It can. I'm just struggling to understand whether or not silver can still be used with the same application. So long term, you invest in silver, it'll buy you the same house with the same number of ounces. Does that argument apply? And I ask this because silver again has underperformed
Yeah.
gold in the last 15 years. Yeah,
Yeah, it will apply, but you've got that extra volatility. So,
right.
the investor has to be aware of that and comfortable with the extra volatility that silver brings. But gold always drags silver along for some reason, historically looking back. And it's because ultimately it is another monetary asset that's used like gold. It's the poor man's gold. And at one time, it was very competitive with gold as a reserve backing. When the U.S. dollar was backed, many currencies were backed by gold. In the United States, there was a period of time where there's a lot of argument whether they should be using silver or gold. And gold ultimately became was backed the currency until, of course, 1971 when Nixon removed that and
Yes.
opened the door for this what is ended up being abuse of the fiat currency.
Tell us how the mining industry has changed over the last 20 years or so. We'll talk about mining now. Before we talk about that, actually, tell us about your track record in the mining industry. I mean, before Kootenay Silver, you had a series of successes, raising a lot of capital, taking companies from small to larger size. Yeah, tell us about some of the names that you worked on before Kootenay.
Yeah, so I've been in the junior resource sector creating new companies since 1988. It was quite an education because I quit a job with a big mining company 3 weeks before the market crash in 1987, and had no idea what that really meant in terms of the market and how difficult that would be being in the junior resource sector. Uh, and so I've been involved in a number of startups since that time. One became one of the first was with the Lease brothers and with a company called Mansfield Minerals that ultimately found a real nice gold deposit and came into production in Argentina that Fortuna now owns. And then the most significant deal I was involved in starting up was National Gold. And we bought the Mulatos deposit from Placer Dome and Kennecott. It was Albert Matter and I were partners on that deal. And we were just a startup junior. We had no assets. We really had no money. And we were able to buy this 4 million ounce resource from Placer Dome in December 2000 when gold was $300 an ounce. Now, the reason was that the gold was $300 an ounce. The deposit at that price was not economic. It needed sort of 325 to 350. Gold promptly went to $280. And they signed over, they transferred the ownership of those claims to us for a down payment of $50,000. That was it. And there's 4 million ounces reserved there. They had a feasibility on 2.2 million of those ounces. But nobody was interested in financing gold. We had payments, these debentures that had to be paid on time periods. It was very difficult to raise the money. Very, very difficult. We got, I think, 2 different extensions with them. And finally, we brought in John McCluskey and Chester Miller, who had a junior called Alamos Minerals. And John had a great trap line of investors. He was a promoter even way back then. Now he's a CEO of a major mining company, Alamos Gold. So we brought them in as partners to help us finance this. And then that resulted in us merging the two companies in 2003 in February and forming Alamos Gold. And Mulatos was the flagship property Alamos Gold for well over 10 years. I stepped off that board in 2012. And of course, it's a much different company today. It's about an $8 billion company. John's done an incredible job of growing that off that asset. But that shows what happens in bear markets and how discouraged people can be, because people were saying at that time that gold is going to $180 an ounce. And we never believed that. We believed gold was going to go the other direction and head to new highs, which it ultimately did. Yeah, what we didn't know at the time is, are we going to be able to finance the acquisition of this? And we brought in John McCluskey and Chester to help us do that, and it ended up being quite successful. It was also a big eye opener to me to Mexico and the mineral potential down there. That was the first time I ever went to look at a mining project in Mexico. And before I went, I was under the misconception that Mexico had been well worked over because it has over 500 years of mining history and some pretty big mining districts. Yet it is incredibly great greenfields exploration opportunities there, which we've seen numerous new discoveries in the last 20 years in Mexico, and the creation of some pretty big mining companies off those discoveries. And that continues today, in fact. Even now, the acquisition that we made of the Columba discovery that we're now drilling is one example. There'd been no drilling done in that project in almost 40 years when we acquired the option on it, before we bought our 100% interest.
Is it harder today to look for new discoveries? The concept of peak gold, which I suppose could be applied to other metals as well, has been prevalent in mainstream media. I'm just curious to get your take as to whether or not this is true.
Well, at some point that's bound to happen. There's a finite amount of gold in the earth, so as any commodity. But you were asking about the industry in the last 20 years. It's changed an awful lot, especially from the junior side of it. A couple of big things that 25 years ago, there was a lot of independent brokerage houses and a lot of brokers in those houses that were mining guys. And they were quite willing to finance a little junior with an idea and a project and give them enough money to go do a drill program. Now that's changed. Money has migrated to the banks got involved. The regulations changed, allow the banks to own the brokerage houses. They started eating them up and acquiring them, and then directed that business into managed money. And so now access for juniors into speculative money that's necessary to make these discoveries is really has become pretty difficult, especially in tough markets. Even though we've got gold bumping new highs and silver breaking out, it's really tough for a junior to raise money if you don't have any resources in the ground already. So 25 years ago, you could walk around Vancouver, Toronto, get enough individual brokers interested to get yourself a decent sized drill program and hopefully discovery. And that's changed a lot from that aspect. Now it's a lot of institutional money and managed money, and it's generally much more conservative and careful. So it's harder to get the real startup money for companies.
How has the emergence of the ETF industry changed capital raising for the juniors?
It certainly had an impact. I don't know how to measure that, but it certainly had an impact, because now you can invest directly in a basket of companies or a basket of commodity. And so whereas the investor might have to go directly, now they just buy an ETF. But on the flip side of it, maybe it brought in more investors too, because for somebody who's not educated in the mining sector, it's a much easier way to start to get involved.
Back in 2011, it was suspected that there was a huge silver squeeze, which is what ultimately pushed the price up to $50. What's the catalyst today, you think?
Be the same thing. Once you really get once you really get monetary demand in there, people want to own silver as a silver asset, then it doesn't take a lot of money actually to get that going. And when you see that and then the supply is being squeezed by the industrial consumption, I think you can get a real strong slingshot in the price.
Same question regarding miners. What's the catalyst needed to push the miners to new all-time highs? Keep in mind the GX index, for example, I'm just taking that index as an example, is currently trading at 37.35, which is a lot lower than its 2011 highs of around 60.
A lot of people love to know the answer to that. I'm not sure I have the answer to it, but generally, like historically speaking, in all the different mining cycles I've seen, it just takes time. So now the industry, the producers are making money. They've really gotten control of their costs over the last several years. So they're the in the silver and gold prices gone up. So they're in a position where they're starting to make a lot of free cash flow there, and that eventually gets recognized by the market, and they'll start to come in to that sector, roll over into the mining sector eventually. And sometimes it just takes time. It doesn't seem logical that it's trading so low. The GDX is trading so low when the prices are so good, but that's a typical lag. And then you'll see the trickle down effect down into the juniors with resources like we have down to the pure explorers. And that'll go all the way through the whole range.
I'm hearing from people, some people even on my own show, saying, look, stay away from the miners precisely because look how far the metals have run and look how some of the miners have not run, right? They're making the argument that this is a value trap. Stay away. How would you respond to this?
Well, if those companies are if the price is up that, like silver, for example,
Yeah.
just 4 or 5 months ago was about $22 an ounce. Now it's about 30. So the producing companies are making $8 an ounce more without having to do anything else. With that kind of price, and especially if it continues to increase, they're just going to continue to make more and more free cash flow. So I don't I don't buy that
So from
argument.
a price to free cash flow perspective, it's become a lot more attractive on a valuation basis.
Yeah. Yeah, that's exactly right. And I've seen that in other commodities too. And you get that. So you get that fear that this is a false run in the metal price.
Dude,
And when time takes care of that, because if the metal price remains strong, and especially if it continues to go up, then that doubt in the market is taken care of.
do the juniors take time as well? Typically, the juniors outperform the seniors in a bull market. That hasn't always been the case for all juniors this cycle. What's going on there in that sector?
Well, because they make their run after the producers, after the majors. So we're just starting to see that happen now. And so it's not time yet. That's literally the answer that I have to that question. It will happen. And it again takes time. First the majors go, then the juniors with advanced assets, resources, and then the grassroots exploration company.
Well, your company, Kootenay Silver, has broadly followed the silver price this year in terms of its pattern. Still not outperforming silver though, like most other miners in the sector. So tell us about your message to shareholders in terms of how you would add shareholder value. What's next for your company?
Kootenay Silver offers a couple things for the investor, and we are attracting two kinds of investors right now. We've got a lot of interest because of this new exciting high grade discovery at Columba. It's turning out to be a newly recognized vein district. It's a classic vein system, a Mexican vein system. High grade silver, numerous veins with high grade hits, some incredible hits, like 34 meters, a half a kilo silver, 500 grams per ton. 17 meters is 650 grams per ton, 90 meters higher than that, one vein, multiple different veins. So we've got a discovery underway there. We've got a big drill program, 20,000 meters fully financed through the end of the year. We believe when we finish that program, we can be in a position for a maiden resource there. And it's of the scale of system of other things in Mexico that have 100 million ounces or multiples of that. It's got that footprint and size potential to it. And when we're getting the drill results like we've gotten, then that really supports our thesis that this is the kind of project that we have. That's one aspect, and it's very exciting because it's current news coming out through the end of the year. Then the other thing is we have three other deposits we discovered that already have resource estimates on them that total 214 million ounces of silver equivalent in the measured indicated category, and then another 54.9 million ounces in the inferred. So a big silver bank there, if you will. And we trade a lot on the silver price because of that. And a lot of investors like that, really like that, especially if they believe the silver price is going up. So two things happening there. We're backed by a lot of silver already, and we're in the middle of an really exciting new high grade discovery that we think could get pretty big. And that's being drilled, aggressively drilled to the end of the year now.
What's your long-term vision for Kootenay Silver? Is it to take these discoveries to production, or are you planning to sell them off?
To build them up to where we can sell them off. That's what our business model is.
Okay. Is there a particular reason you picked South America, Latin America as your primary jurisdictions?
Well, Mexico, because of the mineral potential there, our experience goes back 24 years in Mexico now. And just the opportunity, exploration wise. And silver, well, if you're looking for silver and silver is what you're interested in, you should be in Mexico because it's the biggest silver producing country in the world. And it's got some, obviously, because of that, it must have some of the biggest silver producing districts in the world. So that you want silver, you'd be looking in Mexico.
There's been some talk of some silver executives in Canada, at least, wanting silver to be on the critical minerals list. I don't know if you've looked into that. Do you have any thoughts on that? Should silver be considered a critical mineral?
Well, I was surprised it wasn't because of its large use in the solar industry. So it should be, in there alongside things like vanadium and lithium and copper. Copper obviously because of electric wire, but silver because of the circuitry and because of its use in solar panels. So that's the critical mineral list came about because of our need for these critical minerals for use particularly in the green energy sector. So yeah, it should be on that list.
Do you think that silver or the lack of mining of silver perhaps in North America could pose a national security risk, as some speculators say lithium has posed?
Wow. National security risk. So a threat to the security of the country.
Perhaps silver is mined outside of the country, and so we're reliant on other countries' permission or risk of nationalization. Or the case of lithium, I'm just taking lithium example. A lot of it is mined in China, controlled by the Chinese, which right now is not very popular with the American administration, right? In that sense.
Yeah, the thing about China and certain critical minerals like lithium, as you point out, if they are manufactured, they are refining. I think it's about 90% of the lithium. So they're not actually mining it. Lithium's coming mostly from Australia right now and then South America. So there is an issue with metals like that when you've got such a concentrated refining. So to get the lithium product that goes into the battery, 90% of it or close to that is coming out of China. So that is potentially a national security issue for other countries in being able to acquire that metal for use in batteries. So Silver's not like that. I mean, silver production, silver smelters are all over the world, so you don't have that sort of concentration, and the same goes with copper. So it's not quite the same, but they certainly are metals that if you have them in your country, you should be promoting their development and production, and as much as you can, encouraging the refinement of those metals, more importantly, in your country.
Very good. Tell us where we can follow Kootenay Silver and the company's latest developments.
So you can follow us on our website, www.kootenaysilver.com, and we put out regular news releases on our drill results, and so you can look for us there.
All right.
Trade on the, sorry, David, we trade on the
Okay.
Toronto Venture Exchange under the symbol KTN.
We'll put the tickers and the links in the link in the description down below. So make sure to follow Kootenay Silver there. Appreciate you coming on the show, Jim. Good to catch up, and we'll see you again soon.
Yeah, it was great, David. Thank you.
Thank you for watching, and don't forget to like and subscribe.